Assalamualaikum and hi, I'm Nurulain Binti Rizal from JPA 2515C. We'll be presenting the market review of my chosen counter, which is Mr. D.I.Y. Mr. D.I.Y Group and Berhad is a retailer for home maintenance products and services that is headquartered in Malaysia. It is under the consumer products and services sector, and the subsector is as a retailer. Now, I will be commenting under Mr. D.I.Y stock counter with a comparison of FBM KLCI index. As seen in Figure 1, during November 2021 until early of March 2022, Mr. D.I.Y has managed to outperform the market, even though the company's net profit fell 20.4% to 90.35 million in the third quarter of 2021. However, the CEO of the company, Adrian Ong, stated that Mr. D.I.Y showed a stable and steady longer-term performance. One of the factors that supported the growth is driven by new stores opening. That's why they still managed to outperform the market even though with the pressure of closure of some stores due to the impose of MCO. During the period of early May 2022, Mr. D.I.Y has seen to underperform the market until today. This can be related to the news of Malaysia's new minimum wage that took effect on May 1st, 2022. This is supported by the CEO of Mr. D.I.Y himself, where he stated that the adoption of the higher minimum wage policy has had an impact on their operational expenses and will continue to do so, but they are confident in minimizing the risk by their profit development planning. Next, from the second figure, it reflects another reason that supported a stability of Mr. D.I.Y's performance in 2022. As seen from the chart, the quarterly earnings of the company show a stability since 2020, even though there is a slow growth during 2021 due to the pandemic, but they managed to maintain an increment in terms of their revenue with 1,048.73 million in second quarter of 2022. Due to a rise in the number of locations and excellent same-store sales growth, revenue also increased by 25.8% to 966.17 million from 768.02 million previously. Moreover, the growth factor can also be due to the company's plan to open 68 additional stores across all three brands in the fourth quarter of 2021. Based on the underlying strength of the business, the solid unit economics of the flagship Mr. D.I.Y stores, and the continued progress of launching new stores, Mr. D.I.Y is still confident in its capacity to provide long-term sustainable growth in 2022. In conclusion, the stock of Mr. D.I.Y has been affected mostly by the political and economic factors. Keep in mind that an undervalued market does not always bad for the stock. It could be because the company's stock is regularly profitable and has promising long-term growth potential. That makes the stock is the best option for an investor with buy and hold strategy. And that's all from me. Thank you for watching.